Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Friday, November 2nd, 2018. Now that we have Apple's earnings out of the way, we still need to let the dust settle today. Today is, the first regular session trading day. Keep in mind, a lot of big institutions, they're not active in after hours trading. It's much harder to exit large positions, block trades. Block trades are shares of 10,000 or more. That's usually what the big funds are firing off. You can only use limit orders in after hours. So, although there is some activity there by the institutions, they really come to play once the opening bell starts at 9:30 a.m. So we'll see what happens there. The day is young, but let's look at some levels and developments to watch for, and this one should be relatively quick. All right, we'll start out with the bigger picture. On the SPY, I have many variations of this. Here, we'll look at this one. One thing to note is we're coming back and back testing that 200-day moving average. Today is Friday, so we'll get a weekly close. Again, that 200-day, if you put it out on a weekly chart, because there are 5 days in a week, divide 200 by 5, you get 4, or 40, I should say. So you have a 40-week moving average. That's the same trend line as a 200-day on a weekly chart. And you can see, we broke it last week with a very red impulsive candle, closed well below it. And so we're back testing that level now with trendline resistance above. So that's the bigger picture. The markets still have a lot of work to do to the upside. And one of the themes here that I'll try to highlight in this video is that we can certainly go higher. We can certainly, anything's possible. Anything is always possible in the markets. We can regain those trend lines, but there's still a lot of overhead resistance and levels to do. Now, the bullish developments, as I mentioned recently, again, if you're new to my analysis, haven't caught the recent videos, we had a pretty strong bullish divergence on the RSI. The RSI making higher lows off deeply oversold levels, some of the most oversold levels in many years. And those divergences are now playing out so far for a pretty decent rally. But again, we're rallying back into support. We have this bullish crossover right here on the PPO. That's usually a nice buy signal when you get that bullish crossover. It's in the works now. There's a little work to be done. We'll see if we close the day with a clean bullish cross. That's not a be-all, end-all buy or sell signal. There is no one single buy or sell signal that's 100% effective, but that's something to look for. So I'm giving you both sides of it here. Here's your last couple bullish crossovers that came around these major lows, especially when you get them way down here, pretty deeply extended levels to the downside on the PPO. So that's something to watch. And now, here's the thing. If the move off the top from early October is just the beginning of let's say, the beginning of a new bear market, of a much deeper correction to come, then you would expect that to get some false sell signals. I'm sorry, false buy signals here. In other words, these divergences may not play out for much. Normally in a bull market, when you have divergences on the daily time frame, those are good for runs that can go many, many months. So we'll see. And if these potential bullish signs right here are foiled sometime soon, that will be quite bearish, and it will show us there's a new dynamic in the market. That now, healthy corrections like this, instead of proving to be great buying opportunities as they have been for the past 10 years, these are now the momentum has shifted from buy the rips, or buy the dips, I should say, to sell the rips. And so if that is the case and we have more downside to go, then you can expect this market to reverse suddenly and swiftly, just as it looks like right now, for example, could be just as everything starts to look good, like it starts to look safe to get back into the water, to dip your toes back in. That's when a bear market or a larger correction will usually pardon my French, but stiff it to the masses, the dip buyers, and suddenly reverse. So technicals, again, we're running up to the 200-day moving average here. We're below all the key moving averages on the SPY right now, and QQQ, just as important. Let's go to a daily chart. We have this downtrend line here. I think I showed it to you on another board yesterday. Right here it is. Just a clean, simple. There's a uptrend line. I'm sorry, an uptrend line off the early 2017 lows. A lot of reactions there. We're back testing that, plus the 200-day moving average, which it even does a better job on QQQ of defining bull and bear trends. Let's look at it here on a weekly chart. There it is. very good job of defining the uptrends. As you can see, that red line. Half the time you can't even see it because it's perfectly overlapped by the trend lines that I've drawn. And again, we've had both of those breaks. So these are major sell signals. And although, as I said, nothing is 100% in trading, that's about as good as it gets. So at this point, despite the near-term rally, which again, was expected, was priced in the charts. We had the 60-minute divergences. We were very oversold, but at this point, I'm more concerned about where to, add back the next swing shorts. And again, that can happen anywhere from where we're at now, because if we zoom in tight, you can see there it is. We gave up on QQQ, both trend line support with an impulsive red candle last week, and so far this week. And last week we closed down below the 200-day or 40-week moving average. So far this week we were quite a bit lower, and we're coming to back test it. So, although I cannot make any promises to where we're going, I believe that we're now. A couple earlier this week, I gave some bounce target zones, some areas where I think we'd reverse. We're smack in the middle of that now. So depending on what you're looking to do, whether you're looking to exit longs, whether you're looking to go long and stay long, these are some levels that need to hold. You want to see these taken out if you're bullish. You want to see these trend lines regained. However, that's not my current view right now. Because of all the technical damage that's been done. I'm looking to short rips, and I think we're there. And I mentioned yesterday starting to scale into some semi-shorts, and I have NQ shorts and things like that. And I'll continue to add to those as the case builds. And I think today that's maybe a good time. I'm going to get to the short-term charts in a second. So there it is. That bounce back to the 200-day moving average or 40-week. Can't promise it'll play out, but it's pretty darn objective. And if we go a little higher and we back test the trend line there, again, objective. And I already gave you levels on the daily chart before. 178 would be my uppermost bounce target. There it is, 178 uppermost bounce target on QQQ. I don't think we'll get that far, but if we did, that would be where, at that point, I would be adding my last, bit of dry powder on shorts and not adding on any move above 178. Instead, more concerned about scaling out and closing out those shorts. But as of now, since I don't think it'll get there, this looks about as objective as it gets. And let's just come down to these 60-minute charts and 15-minute charts. Here's the 60-minute charts. This was the golden downtrend line. I was having colored yellow on the 15-minute time frame. So we broke above that. A couple things on this. We had the positive divergence, bullish divergence, everything else. That's why we covered all our shorts here earlier this week, and a lot of traders on the site, myself, went long. And again, I don't want to try to be greedy and milk every bit of this bounce. It may have more to go, but I suspect that that may be it, and we'll come back down here. And a nice target, I think I laid this out yesterday, was come back there and backfill that gap right here, down around 166 or so on QQQ. But we may have more. So we'll have to see how this plays out. And again, today, let's see what they do with Apple. So far, not good for Apple. I'll get to that chart in a second. On QQQ, this is a scenario laid out yesterday morning. So here it is. This was posted in the trading room on rightside-of-the-chart.com. Shortly after I had first mentioned, we had a pullback and a back test of that trend line. So that would be an objective long entry. My scenario had us going up to about this 172 level, putting in a divergent high. You can see the divergence lines drawn down here, reversing, and then a move down here, possibly all the way down here before any major reaction to that 165.71 level. We'll see there's certainly some support at the top of the gap. And that was, again, yesterday's chart. Now here's what it looks like today. So there it is. We ran up there, popped a little above 175.90, 171.95, a little above 175.92, but hardly. Nice reversal so far. You can see now the divergences are confirmed. We have bearish crossovers. That puts in a lower high, confirmed divergence. And so, it opens a door for a continued slide down. That'd be about another over 3% from where we're at now. From here, if we were able to short around the 172 level, and we do get there, and of course there could be a lot more downside if this is the end of a counter trend bounce of a much larger correction. Keep that in mind. As of now, again, I'm a little bit, I have some positions, but I'm watching Apple. We'll see what they do there, and the markets themselves. But we do have some pretty good sell signals at this point in time. So there's QQQ. SPY, I laid out a similar scenario. Yeah, yesterday, and this was it, having SPY coming up, rallying up to about the 274.50-ish level and then reversing. So far, there's a reversal. Looks like our divergence is confirmed now. We haven't yet seen impulsive selling. The fact SPY is still green, so we'll see. It's anybody's game, but those are my scenarios. So if QQQ plays out the way I think it will, then SPY comes down along with it and probably also comes in for a maybe a partial or full backfill of that gap. And again, that's minimum. That's if this market wants to chop around. Maybe it goes higher, makes another thrust up. Right now I'm focused near term, and that's what I'm looking at. Okay, and just to take a quick look at the futures, I posted this. The futures, of course, give me a little more insight to really what's going to go on with the market because you can see the round-the-clock trading that you don't see in QQQ and SPY. So I like to both trade futures and also use them in my charting. And you can, what I pointed out yesterday and again this morning when we were still up within these wedges is this. We have here. Let me try to zoom in here a little bit. Okay. Up here, I labeled this, major resistance zone and significant resistance zone. So really, one way to spin this, that's my bounce target zone, if you will, for what I believe to be a counter trend bounce in a much larger correction with more downside to come. So we've effectively hit the bottom of that resistance zone. What's there? You have a lot of levels. You have a price resistance level and you have a bunch of Fibonacci clusters. And those are where you draw Fibonacci retracements off major reaction highs there to the left of the chart. So we have a cluster of fibs, major resistance zone, and more, or as importantly, I love to see rallies up into resistance with bearish chart patterns. So what you have here, and this is what I highlighted, is a nice clean bearish rising wedge pattern. Again, this morning we were up here, and since the open, we went ahead and broke down from that wedge. There's an impulsive breakdown, and we are now at support. So this is support one. The market has a good shot of holding here, or at least it needs to hold. And maybe we get a reaction off this level, maybe not. Because this wedge broke down, this is one of those instances where, and if I wasn't doing the video, I might cover, try to game a little bounce here on my NQ, shorts. I'll let the video roll, ride out any bounce because of the scope of this pattern. You take the widest part of a wedge, which is right here, add that to where wedge breaks down, that gives you a measured target. So the measured target alone should take us down below that level. And so at least at this point in time, I'm holding tight. I might stop this video in a couple minutes and go ahead and cover and reverse that trade. So please don't ever do what I say I'm doing. I'm a very active trader. I'm in and out of NQ sometimes a dozen or more times a day or whatever else I'm trading in an active market. But as far as swing trades go, yeah, I think it's time to start layering back on positions, as I mentioned yesterday, and into today we're seeing more evidence. So there's a clean breakdown in NQ, negative divergence preceded that, and again, you'll see the targets. You can look at QQQ, but if you're a NQ trader here, I'll add a level right here that looks like, and I'll have to check this to see if it aligns. I think it would with that gap that I showed you on QQQ. But let's put a horizontal support level somewhere around here, 68.08, give or take. Looks like a likely target if this support cluster or support zone that we're on right now gives way. And there's actually that support zone I should mention too, goes down a little bit. There's some reaction lows all the way down here to about, let's try to nail the bottom of it, about 69, we'll call it 69.35. If NQ can't hold that, then it is probably headed considerably lower. And the same story on ES. When I posted these charts earlier today on the trading room on the right side of the chart.com, we were still, NQ was in the wedge, then it fell to the bottom. ES was a little bit above it. ES are your S&P 500 E-minis, but as you can see here, they as well have broken down, putting the markets, at least the futures, on a sell signal. And you can see the breakdown right there, fairly impulsive. And of course, there's some resistance right here, support, I should say, support down below. So, with all the volatility that we've had lately, there's a lot of nearby support and resistance levels. So what I can do, I think my skill sets lie in not only pointing those out, but then pointing out which ones we're likely to get reactions off of. So I'm going to point these out now. Again, we're only, as I'm doing this video, 1 hour into the trading day, and we'll get to Apple here in a second, and we'll wrap that up. Okay, this is what it's all about today, or to a large part, the Big Apple. Big Apple because it is the largest component by far of the Nasdaq 100, also the largest component of the S&P 500, largest company in the world. Just lost its $1 trillion market cap title. That was given up on this move down. But who cares? That's just a number. The point is, technically speaking, Apple is now in a very precarious, very bearish, not even it's precarious, but it's already broken down. It needs to recover 216 or so with conviction. Otherwise, and I'm not sure it will at this point, I probably won't. A breakdown is a breakdown. Now, the only time it's not, as I mentioned, here's a level. Let me just point this out. Called about 215, 216. It's chopped through there quite a bit with the recent volatility. But as I said yesterday, when you have a stock, especially one with a history of big moves before and after earnings, and you get a breakout or a breakdown, of a major support or resistance level, just in front of earnings, like you did here, recently last week, earlier this week, I should say, that doesn't mean too much. We broke down, then we snapped back above it. The Apple bulls were optimistic of earnings. They rallied it up right into earnings right before, which surprised the heck out of me. I had thought for sure they would be nervous. It's that whole shame on you thing. Fool me once, shame on you. Fool me twice, shame on me. After watching what happened to not just Amazon, but particularly Amazon, because that's the second largest company. They got taken to the woodshed after earnings. It wasn't an awful earnings report either. But my point is, this market has had it clearly shown a history of a zero tolerance for anything but a stellar. In fact, at the Journal, I get a subscription to the Journal, and they fire off emails when there's breaking news. The initial report was just rosy. The headlines on Apple's earnings report. Now, yeah, it was something to do on the conference call, and they're going to stop giving some forward numbers or something, but it doesn't matter. All that matters really is the market's reaction to it. And again, they sold down Apple even before the conference call on positive earnings. So that is what I've been saying all along. It's not about, try not to dig into the numbers. Don't listen to these talking heads on CNBC and everything, what to buy Apple. It's what the market's reaction to the stock is. And so far, and initially, immediately after the report, and now as I'm waited to do this video, we're still down almost 7% an hour into the trading session. All that's telling us, forget about earnings, forget about where you think Apple's going, what's going to happen with China, currencies. All that this is telling us is right now there are more sellers in the market than there are buyers. Stocks move up and down on supply and demand. And stocks, just like they bottom on bad news, they top on good news. So we'll see, whether this proves to be a major top in Apple or not. All I can tell you right now is as of this moment, and again, the day is young, we are below this key support level right here, and Apple would have to regain that. This trend line's been sliced through so many times. Let me just get rid of that trend line now, as well as this other one. They're probably not as important anymore. But what we do have, we know we put in a divergent high back here, negative divergence at that recent high, and that divergence is now playing out. The stock is in a clear downtrend. A downtrend is defined as a security making a series of higher lows, lower highs, I should say, and lower lows. So there's your downtrend right there. But again, it's all about this 215, 216-ish support level, and it's broken right now. If they regain it by the close, great. If they don't, not so good. Longer term, look, I know a lot of people own Apple, so I don't mean to, when I say Apple bulls or this and that, I understand that a lot of people own the stock, and it is a great company, and it is an earnings juggernaut. Long term, right now, it actually still looks okay. I don't see anything, although I do see the negative divergences that tell me that it will probably, at some point in the near future, probably this year, go on to break down below this uptrend line. And I'm talking a very important uptrend line that comes off the early 2016 lows. You have that trend line on Apple here. You also have it on most of the major indexes in sectors like XLK technology. So you have the divergent high, but you have Apple also above its 40-week moving average, which has done a great job of defining the uptrends. You can see here in bull markets, there it is here, capturing all these uptrends. So I just want to say right now, we don't have any long-term sell signals. We have that short-term on the daily I just showed you. And that can sometimes play. It's like dominoes are stacked. If the short-term sell signal plays out for more downside, then what that'll do is bring us down here. But I can tell you, at first, probably get a test of these levels. When you hit that 40-week moving average, 200-day moving average, and or this trend line here, you'll probably have a reaction there. Nothing's guaranteed, but like I said, so right now my near-term and intermediate outlook for Apple is bearish, although the trend is bullish, if that makes sense. So there's the trend indicators right there and the trend lines and all that. And then finally, I'll mention this one again. I mentioned it yesterday. Here's one. Amazon, sort of led the way down for some of the big names in QQQ. And yesterday I pointed out that it was back testing its key 200-day moving average from below. Popped a little bit above it today, but so far moving back down. And again, really most important is how this closes today. Here's a long-term weekly uptrend line. This one actually comes off the early 2015 lows here. So it's a little bit longer than that trend line on Apple. Very well defined. I like that trend line. Look at all these reactions. 1, 2, 3, 4 there. And we hammered off it so far this week with a nice doji, but we're pinched right now. And I think I mentioned this in yesterday's video. So you have the 200 and or 40-week and 200-day moving average and some price resistance are up there, but you also have trend line support we hammered off of today. So the trend line is, of course, I would put a higher weighting. Anytime you have two key support levels, whether it's a moving average or two different trend lines or price support, and they come in close proximity, you're in a bull market, a bull trend. You want to give the benefit of the doubt to the latter of the two to break. So the last of the two in this case would be this trend line here. So there's what you want to watch on Amazon. It'd take pretty decent reversal to get there. So it may not happen this week. That'd be a 11% drop. So we had a nice rally off the lows, but that's something to watch going forward. But as of now, let me just keep this simple. You look at these short-term charts. This is just a 15-minute. You can see it here on a 30-minute chart. A lot of these stocks, these market-leading FANG stocks, have run up to resistance. There's QQQ. I already showed you that chart. There's Apple, ran into downtrend line resistance, rejected. You can see, and this is a 30-minute chart. Just all this supply, we'll call it here. A lot of trades up in this range, and Apple's now below that. So that's not looking so good for Apple. And they already did. I wanted to see this too. I mentioned to somebody in the trading room, let the dip buyers feast. They were going to. They have to. I've watched Apple for so long. I know how the psychology is. It's the most beloved stock. It has a cult following, not just their phones, but the company's stock as well has a cult following. So this morning we were going up. I said, let the dip buyers buy their dip. They have to. That's just what they're, like Pavlov's dogs, they're conditioned. And now they bought it and they got faded. That hurts. Dip buyers that thought, okay, well, that was a big move down. Kramer told me to buy the stock, so I'm going to step in and buy it today, or whoever. There it is. That rip, that post-opening rip has now been 100% faded and then some. That's not so good. So if Apple cannot get back today, I don't see it happening, but anything's possible. I just wanted to cover that. And then finally, we have Alphabet, 60-minute downtrend line rejected there. And we'll go back to that 30-minute. Alphabet Class A, the other share classes GOG. So a lot of stuff just rejected here on these 50-minute down, or 30 or 60-minute downtrend lines. Facebook kind of flirting with it, but now back below it. And then of course Intel. Intel had a nice rally. This was the most bullish of all the top components of the NASDAQ 100. You had this bullish falling wedge here, broke out, back tested here. We had a nice pop, but that pop so far is stalled. It keeps failing here at this 200-day moving average. It failed here, popped above it briefly, did the same thing here, and stalling out. So at most, maybe a little more upside there, but probably head back down lower. And again, I'm only covering these because they're top components of the QQQ. All right, let's wrap it up here. You guys have the downside targets. If we can get some traction on this sell-off here, coming up to support now on 168.83, and looking for a move down, maybe a backfill this gap, or move down to about 165.60. That's probably what they do, is undershoot that gap a little bit just to smoke all the the longs that step in there and try to buy an exact backfill of the gap, which is a little bit above there. So let's just target that. Oh, and I should mention, we still have the golden downtrend line too. That may come in as support as well if we get down there. And that would roughly align with that 167-ish level, although I'm not crazy about that. I'm going to take that level off. Let's keep this one simple. There it is. The golden trend line and then 165.59. as your potential downside targets if these divergences play out here. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.